Hi, good morning everyone. My name is Ram Damija. Welcome to my channel. Today is 20th of July. I'm a full-time derivatives trader and an investor and a mutual fund distributor. I come over here to share my thoughts on the markets, the derivatives market, and what are the main events and how they might impact the markets going ahead. So let's begin this week. It's been an action-filled week with the Nifty being slightly under pressure. The markets are in a consolidation zone, and this week particularly was very heavy in terms of the result season. So there are many companies that have come out with the results, and we are going to see what the potential impact of that can be. Apart from that, there has been a lot of selling by the FIIs, which was not there for the last 3-4 months. So that selling is back, and the US markets as we speak continue to make all-time highs, while our markets are consolidating, and now they have broken 25,000, which was a key support level. However, there are various other support levels that are still existing, and we will have to see how the markets play out over the next few days. So let's begin with this week's roundup and how things have shaped up. So this is the Nifty chart. As you can see, this is the one day chart for Nifty, and over here you can see that this was a very good support line for Nifty at 24,900. So it took us long time for us to cross this particular line. It took us almost a month and a half, from 12th of May to 20th of June it took us to clear this line, and we were able to clear it till 25,600 odd. But we have given up most of those gains, so it's basically in a consolidation phase. It's quite possible that we might go down to the next big support, which is 24,500. This will be a really big support because the markets did not break this level even during bad news, which was the Iran-Israel conflict news. You can see over here, this was the day, 13th of June. So the markets should not break this until there is something majorly negative with the markets. However, I think we might actually bounce back even before that, because the trend is quite positive, or we might be in a consolidation zone. We might play in this particular band of 24,500 to about 25,600. So this is a very big range, I know, but when markets are actually consolidating, there will be some bad news that will take it to the bottom of the range. There will be some good news that will take it to the top of the range. But otherwise, I'm not expecting markets to break down, simply because we've got too much of good news coming in, be it the RBI liquidity, be it the corporate results, be it the lower inflation. So everything is pointing towards a stable and a good, robust market. Now let us look at what Bank Nifty is doing. Bank Nifty is much more stronger than Nifty, and you can see the retracement also has been much lesser. So Bank Nifty from 57,500 has just gone to about 56,200 odd levels. So it's not cracked much over here. And then we have some other key support levels, but I don't think banking is going to crack big time. Banking, in fact, will be the leader of the next bull market, and that we have been seeing throughout, where banking has been making all-time highs every other day. And now even the results that have come in look good. We're going to briefly talk about those results as well. This is one of the concerning figures, which is that FIIs have sold about 16,955 crores this month till date, whereas DIIs have bought 21,000 crores. So we have seen that whenever FIIs sell big, I'll take you through over here. So if you see, these were the big months where FIIs sold: December, January, February. So they sold 16,000, 87,000, 58,000 crores. This is when the markets actually correct. And after that they stopped or started buying little, and the market just zoomed. So this is the first month where after a gap of 3-4 months they have started selling. It could be, the reason could be the valuations have run up, markets have gone up a lot. Because there is no other reason that I can think of. The dollar index is actually going down, so FIIs actually have an incentive to take money out of the dollar. But this is what it is looking like, that FIIs are selling over here, and selling has resumed. So 17,000 crores is not too much, but then also the month is not fully ended yet. So this figure easily, if they continue to sell like 5,000-8,000 crores a day, this can swell up. Or if they stop over here, then it should be a okay month. But this next figure over here tells us that the selling might continue. So you can see over here, the open interest is at 0.59. So 0.59 open interest is not all that great. So there are about 7 crore put versus 13 crore calls that have been written. So this indicates that there will be some pressure on the markets. So 25,000 is where a lot of calls have been written. 25,100, 25,200 maximum calls are there. So these three levels are going to be very, very important as we go ahead for the markets, where they can probably face a resistance. In terms of the option premium, you look at the straddle, it's at 251, so option premium is not very high. So this is one peculiar change that we have seen in our markets over the last few days, especially since Jane Street has got banned, that option movements have got restricted a lot, and that is also getting reflected in the premium. So premiums are very low. So next 1 week Nifty premium is only 250 points, which is very, very low. This is indicating where we are in terms of our indices from their all-time high. So you can see banking, finance, etc. had made their all-time highs many times, and they're about 2 to 3% down from their all-time peaks. This column number H shows how much of an upside is required to reach the all-time high. So banking requires about 3% only, whereas Nifty has now gone to minus 5%. It had gone to minus 3%. Now it's at minus 5% after correction. So it needs about 5.2% to reach its all-time high. Small cap is doing well. In fact, you look at this mid cap, it's very interesting. So mid cap is just down 2.4%. So mid cap and small caps are leading the rally, and hence it is important for you to very well be diversified across across market cap classes and so on. And also it is important to be diversified across various factors in the market. For example, momentum, value, alpha, quality, whatever be your investment style. And you should not miss these corrections, and hence that is why I keep on saying that every correction that you get is a discount sale for you, especially if you know what you are buying into. Because if you were buying the market when it was at 26,000, now you're getting it at 25,000 and even below. So it's like you are getting the market much cheaper. So hence it is very, very important, very, very critical to take advantage of the falls that happen in the market from time to time, and hence it is important for everyone to build a very strong portfolio, and I help people do that. I'm a mutual fund distributor. I'm fee registered mutual fund distributor. I help clients build very strong, robust mutual fund portfolios, which are based on market cap, which are based on factors such as quality, momentum, alpha. So whichever market cycles we are in, I sit with the clients, we analyze our portfolios, and then we decide that this is the best course of action. Our portfolios are very well protected on the downside because we have diversification in various asset classes like gold, international, and so on, and debt. And on the upside, the portfolios are very well positioned in a way to take care of the upside advantage. So in case you are interested in building a very strong mutual fund portfolio, please contact me through the Google form. Please leave your details, and I will contact you. Please also mention a good time to call you. And we will have a discussion. Also, in case you are just interested to get your mutual fund portfolio evaluated, I do that also free of cost. So just drop in again in the Google form the message, what exactly are you looking for. If you're just looking at evaluating your mutual fund portfolio, because a lot of people have got a lot of overlaps, a lot of schemes that they have taken are not good or not well performing. So it's a good way to get your mutual fund portfolio evaluated. It's free of cost, as I've said. So I do that as well. So yeah, coming back to the point, it's a good time to invest. The markets might correct a bit more, seeing the open interest that is there. But any correction, in my opinion, should be a chance for people to construct their long-term portfolios. Markets can correct. It's impossible to predict the markets in the short term. And right now, markets are consolidating, correcting, even when there is no bad news. So if a bad news comes as a trigger, the markets might correct a little bit more. But having said that, there is too much liquidity in the system. There is too much positive news in the system. The inflation has gone down to 2.1% odd. So the results are coming out to be good. So I don't see any reason why markets should continue to correct. They might go in a time correction for some more months. It's quite possible because the bear cycles typically last anywhere between 9 to 18 months, and this bear cycle started from September, so it's not even been 12 months for this particular bear cycle. But having said that, I will take your memory back to 2021. When 2021 September we peaked and we made a bottom in June 22, but it was not until March 23 that the rally started again. So it was a good 18 months odd consolidation. So we might be seeing the similar thing wherein the correction has started from October 24, the bottom was made in February 25, and we might be in a consolidation phase till, who knows, maybe the end of the year, December 25 or October 25 or March 26, we don't know. But these phases are very good phases for accumulation of your portfolio. So now let's come back to where we were, what we were discussing in terms of our market outlook. Now let us look at, this is the performance of all the indices over the last 1 month, YTD 1 week. So if you look at YTD, which have been the best performing ones, as I've said, is banking and financial, which are up 10 to 12%, followed by metals, which is up 10% for this year. Infrastructure is 8.9%. Nifty has given 5.6%. So this is the benchmark. Anything below that is underperforming, anything above that is overperforming. So let's look at the underperformers now. Auto, PSU, MNC, mid cap has been underperforming because we are in a correction phase. Small cap has been underperforming, and the worst performing are pharma 3.5 and IT is minus 14.3. So all dollar facing industries have been underperforming. All domestic industries like finance, banks, etc. have been doing much better. Now let's look at what else is happening in the market. So Reliance Industries came out with its results, and this is on money control over here. So Reliance Industries reports highest ever consolidated quarterly profit. Okay, so just one disclaimer before we get into the company specific news is that this is not a buy or sell recommendation, absolutely, and this is just analysis of the individual company. So kindly please read the disclaimer over here. I'm just analyzing the results, and it's definitely not a buy or sell recommendation. I might have vested interest in all these companies. In fact, I own some of the stocks as well. So Reliance Industries reports highest ever consolidated profit, EBITDA in Q1. And Reliance Industries results, in my opinion, were good, and profit increased sharply by 76%. That is because of the sale of Asian Paints stocks that they had of about 8,924 crores. So hence the profits look elevated. The top line also increased and rising 6%. And in terms of the operational performance, the company has seen a 35.7% EBITDA, and Geo Platforms has also done all right, if I'm not wrong. It is increasing 18.8% due to its strong subscriber growth. So that's all good news. Reliance Retail also, I think, has done well. Base expanded to 35.8 crores. And also, Reliance Jio has been making a lot of news with their tie-up with BlackRock, and they are now tied up with a couple of other insurance companies also, if I'm not wrong, Allianz, if I'm not wrong, that they have just tied up. So there has been a lot of news flow that has been happening for Jio, which is good news for Jio and Reliance both. Now let's come to the next result which came out, which I think was beating the street estimates. ICICI Q1 net profit jumps 15% to 12,674,768 crores, beats street estimate. So that's a good result in my opinion. You can read the details over here. The third result was HDFC Bank, which came out. It increased, net interest income increased 5.4%, and net profit was up 12.2%. The results were stable, but and they also announced 1:1 bonus and 5 rupees special dividend. Now let us come to what are the other things that are moving the market. So primary market action, there are 10 IPOs which are going to hit Dalal Street this week. 3 listings lined up for next week. So there are a lot of these small IPOs that you can read about. I have got no idea about them because I don't subscribe to them, but what this is basically indicating is that there is a lot of liquidity which is going to get sucked out of the market through IPOs, and there are a lot of big IPOs also which are lined up. So whenever they come, they take out liquidity from the markets, and what that ensures is the market doesn't run up a lot, and people are able to get the markets at decent valuation. So it's a good thing. Whenever the markets are up, promoters will come to sell their stakes. There will be a lot of paper inflow which is going to start. But that's not necessarily bad for the market, because otherwise, if this primary IPO market doesn't come, then the secondary market valuations tend to go up too much, so that it might cause a bubble kind of a situation, and hence these new offerings keep that in check. So it is good. So a lot of IPOs are coming up, so people who are in IPOs can have a look at that as well. Now let us look at the international markets, international Qs, how they are stacked up. So let's start off with US 30-year yield. It has come down a bit, or rather it's at 5, come down from the highs, I would say, which had crossed 5. So it's at 4.99, but it's still not below the danger mark. 5.5 is when real problem will start in US. S&P VIX is very, very calm, 16. So US markets have been doing very well. US 10 years is fine, 4.4. It's come down from 4.5. Nasdaq was kind of flattish to slightly negative, but nothing much over here. Bitcoin is making all-time highs. It went to 122. Now it's under 117. US dollar is at 98, which is okay. Brent is closer to 70. I don't know why. Brent had gone to 65. Now it's picked up a bit, so we'll have to see. It might have something to do with the sanctions, etc. That might be on the cards. So it's increasing, inching up slowly, which is not good for us. We have broken 86, so we are at 86.15. And silver is at 38.4. It's the best performing asset class this year. And gold is at 33.50. Now if you look at over here, this is the international markets and how the assets are performed. Now you look at the YTD performance, silver has up 31.54%. So wow, it's the best performing asset class this year. And then you have gold, which is up 27%, followed by Bitcoin, which is up 25%. Nasdaq is up 9.77%. US 30 years is up. What is down is Brent oil, 7% down, and dollar index. So this is the international cues and how they are stacked up and how their performance has been. So anyone who invested in silver and gold will be very happy, and that is also required, because you should have your asset allocation completely. There should be some diversification. You should not be 100% invested in one asset class. There should be gold in your book. Also there should be debt in your book. And that is where I feel that for retail it helps to have an advisor who can advise you, or a mutual fund distributor can advise you how to, because there are even mutual funds which are there for debt, which are there for gold. A lot of people don't know how to invest in them, which are the good ones. So this is where the role of a mutual fund distributor comes in. So again, if anyone is interested, please fill up that form and I shall get in touch with you and we can have a nice discussion. If nothing else, you tend to gain and understand a lot of new things about the markets, about the asset classes and all, and then it's your decision whether you want to invest or not. So now coming back to the markets are looking okay, but they might be under slight pressure. The open interest is not good. The results, although they look good over here, but we saw that when the results are not good, the market is punishing badly. If it's not a very big beat, then when the market sentiment is down, then good results are also discounted. So let us see how Monday plays out. Monday is going to be crucial, and I'm not expecting too much of a crack in the markets as of now, though the open interest is negative. But I think if you just stretch out your duration a bit to a month, 2 months, 3 months, 6 months, then I think all these opportunities are good buying opportunities in my opinion. So that's it from me now. If you like my content, please do subscribe to my channel. Please share the video with your friends, family, and please leave comments in the comment box. I like to read all the comments and I reply to most of them. So I shall see you soon with another update. Have a nice day. Take care. Bye bye.